Hi everyone, hope all of you are doing well. It was a while since the last video was posted, but I felt like this was a really great opportunity from a trade setup that we had occurring last week, which actually took 3 attempts for me to actually get it right on the last one. The first two ended up being break even. But that just goes to show how patience really is important and also how you sort of adapt along the way, sort of drawing out whatever structure is forming, some potential SR lines to be aware of those, and also some new blocks here in this case. But I felt like this was a great setup, and I really just wanted to take it completely from the top because there are some great points to be made about everything pretty much that happened here. So please stay tuned, it will be a good one. Okay, so I think it's always pretty important to take things from the top. So let's just start by looking at where this setup actually came from. So if we go out here on the 1 hour, I've actually drawn the line just right here at this candle, which was essentially just Monday morning. It was when, let's see here. Yeah, it was when this was posted here on Discord, drew out those thresholds there, the high and low level view. So that's essentially market open there right around the morning of Monday. And then what we actually had to generate this setup that we had here was, my original thought was we essentially had a bit of a supply block here, very nice kind of distribution region going on with then the markdown to follow, also nice volume going around in this block. But what we actually did was we pushed way past through this, so now just according to general ST theory, this would now become a swap zone, so instead of being supply it would be a demand block. And that's just an extra bit of confluence to keep in mind, because then if we actually go down on say the 30 minute, which is where I drew up these zones, we had a very nice fresh RBR here with an insane amount of volume coming out of there. Very nice little region there, and this is the outer one here is the 30 minute. And what I did as well was I went down on the 15 minute and just checked if I could get a bit of a more zoomed in view for a bit of a more sort of high density sort of a compression area. And if we see on the 15 minute, we had some nice indecision candles there as well. So this intersection between the 30 and the 15 minute is, or I mean going into the week, was of very high interest to me. And that's, I mean, we slowly pushed into that. That was the only real thing that I was looking for take this first one, just really just reaching that intersection and then entering my first position just like that, and then seeing what would happen. And immediately upon reaching the intersection, we did actually shoot right up with a pretty nice bullish engulfing candle past a bit of the rejection there. And then once we sort of retraced to this general kind of bit of a support line there, I just entered because in cases where there's not a lot of volume going on and there's not a full structural shift, I generally pretty much never enter my full position right away. I like to sort of ease into it, and then if the structure actually falls and we start seeing the shift, that's when I sort of increase my position. And I mean, a very similar thing happened here as well, but these two sort of go hand in hand. I think I've talked a bit more about them in the Discord specifically, but what I wanted to make very clear is why I didn't actually target this region here, because this is also a supply block here. We have indecision here, drop base drop, which was respected there again. But that was the main reason why I didn't target this, because we had come into this already once, twice, and this would have been the third time. And even if we wouldn't have pushed through it immediately, say maybe come back down a little bit and then up, we would have essentially come into it for the fourth time. And the more times you're hitting a block, the less amount of orders there will be there, so you're just eventually gonna break through the more times you hit it. And that's why I had my targets up here at like 1830, which was just the upper side of liquidity. Really, that's what I was shooting for to get last week. But yeah, both of these cases very similar, other than that this one I didn't really wait for a shift. But for this one, the entry was right after this huge indecision candle there. What was actually happening here, we did push way through the block and then right back up again. But since I had actually drawn this on the 30 minute, and we had essentially a perfect closure right back above the demand and leaving just a wick past the entire demand block, and the see here, just like the rest of this area right here. And yeah, since this was now not the fresh first touch, that's why I didn't just enter blind again. I had just gotten taken out the break even on these, and yeah, didn't enter immediately right there. But the only reason I entered, as said, was because upon this closure of the 30-minute, it was just very clear that this region had been respected. But yeah, then we did actually push up again to 1820, then bang down again. But this is where the key thing is, because if you look at this closely, what we've actually formed now, if I just remove these a little bit, we formed a nice bit of a sort of a resistant band and a support band, so just a range. And generally me myself, I don't like trading ranges, but a very big thing, a key thing that Wyckoff talks about are springs and upthrusts. And these are basically things that happen at accumulation and distribution areas, which automatically give you a set of support and resistant bands. What generally happens before these large moves to the next side of liquidity, in this case up to here, are what is referred to as springs or upthrusts. So in this case it is a spring, since it's coming through the support band and then up. And we have a nice little picture here. It's actually from my book, but I've showed this plenty of times already in other videos. But the idea is basically that you get some form of retail line that a lot of people are interested in buying at, just a lot of regular everyday traders that trade from their home, and then you generally just put your stop loss below support line, for example. And then what happens is just institutions will push price down into what generally will be a demand block, and then having collected all of these orders that they just stopped out people on, they will then take those and actually carry them to the next side, which is all that we're really trying to do. We're trying to follow them. So seeing, for example, a support line solidly broken and then entering a demand block and showing signs of like rejection there, that is a very, very good sign to go long, you know, because at that point a lot of the retailers have already been stopped out, they have lost their money, and you might as well get in then with the rest of the bigger players who are actually there to make the money, the whales, so to speak. And just a quick point to add into the area of adaptation as well. Although we can see that, say, this main 30-minute block held incredibly well throughout the entire week and did exactly what we wanted to do in the end, even though there was a lot of rangy motion going in between, we did come into it and then up to the next side. So exactly what you want to see, even following simple structural theory anyways: impulse, correction, impulse. So the block worked really well, but just the same way you can draw your resistance and support bands as you come along, you can also start to sort of optimize your zones a little bit. So like this zone was drawn when we were way up here. So for example, at this point I didn't have any information of what price was doing, but if we look at the 30-minute here as well, we can completely start even like disregarding this block at this point, because we know that this area in general is a very demand heavy region, and we can just sort of kind of keep ourselves a bit up to date. So same when we were up here, and then I came down for break even as well. That's when I started looking for new fresher blocks, and this one right here, strong indecision, very powerful leg out within this demand region here. I just felt like this was a bit more appropriate, and it also lined up incredibly well with the support line to give us the spring exactly the way we wanted to see here. So that's just one thing. Although like if you draw your blocks at the beginning of the week, they can hold really well depending on what time frame you trade. But if you now keep up to date with what's actually going on, that's kind of naturally better, since you know where the most fresh blocks are sitting, and it's just nice to be aware of. So that's just an extra point to just sort of keep going with the flow, but also marking up your charts as the week progresses, and not just leaving them. That is my personal opinion and piece of advice, and I hope this was useful. As said, there's a bit more information about these trades here in the Discord as always, and if you want to join, of course, the link will be down in the description. But other than that, I wish all of you a nice weekend ahead, since it's now Friday, and all the best.